All right, welcome back to another video. Welcome back to Royalty FX Academy, where we learn how to trade effectively. Okay. Um, this session today, we are going to cover stop loss placement. Okay, where to place them. Now, with these ones, we're only going to cover buy setups. As always, everything we cover from the past and today is straight from our book, the Royalty FX Master Collection, right? We have 7 books that covers everything that you need to learn to understand about the Forex market, okay? We have a book that covers price action, the price action that you need to buy the market or sell the market that guarantee you a 97% winning rate, okay? We have the workbook, Success in Sight, workbook 2, volume 2, Success in Sight. These workbook covers the ins and out when it comes to drawing trend lines, understanding Fibonacci, zone placement, structure itself, higher highs, higher lows, lower high. Now, each book covers a specific market. Volume 2 covers a selling market, where volume 1 covers buying market, right? 60-day challenge. Of course, we do have our ultimate price action, where we have all 6 different variation of bullish price action and all 6 different variation of a bearish price action. We do have the ultimate buying setup, where we cover all the buying setup, all 7 different variations of the setup that the market will always give you before it buys up. Okay. Every single one of them. And then of course we have mastering the bearish force that covers every sell setups from the double tops and the break and retest after that. All 6 to 7 different variations of double tops and break and retests. Of course, each one of them has the price action that the market will normally give you, all the different variations of them. Now, with that being said, World TFX Academy is now open. We are now accepting students. If you are interested in learning how to trade effectively this way, if you're tired of sitting in the chart or waking up too early, sitting there for 3, 4, 5 hours and still getting waked out, it's time to start trading effectively. All right. It's time to stop losing. The Royalty FX Academy way, where we have our setups available between 1, 5, or 9, where we understand and know that our price action will be available to us at that specific time. And all you have to do is just wake up, click buy or click sell, place your stop loss accordingly, and target TP. And that's it. All right. No more guessing. No more assumption. Okay. No more hope and praise when you take a trade. You could pray after you take the trade. It's good to have faith. Okay. It's time to understand. It's time to buy your time back. It's time to take control. It's time to master the Forex market. All right. WorldTFXAcademy.com. All right. Come and join me, where we do teach 5 days a week, and our one-on-ones are free. You don't have to pay for that. I understand times are hard. I got you. All right. There's a lot of homework videos. There's flashcards that you need to do. All right. Come in and join us. Now, with that being said, let's go ahead and jump into this. When it comes to stop loss placement, so we do always have rules every time we cover any market itself or trading in general. These rules are the psychology that we built. Okay. The psychology that we built. And again, any trader that is currently trading right now that's having a hard time with the psychology, we do have that book specifically for that, right? The Discipline Paradox. Right now, it's my number 1 sell. We have a lot of people that purchase this book that's not even traders. Now, the reason why they love this book is because it gives you specific instruction on how to become a better person, a better trader. Okay. It's not telling you stories about the past. It's giving you the step-by-step guide as far as what you need to do to excel. All right. Discipline Paradox on Amazon. All right. Now, like I was saying before, if you are interested on learning how to trade, right, with this method, right, if you want a instructor that's going to teach you the way that I go over this, right, that's how I teach, right, that teach you with a smart board in front of them, going back and forth to make sure you understand in detail how the market is moving, when to buy, where to buy. Come in and join me. Remember, royaltyfxacademy.com. All right. We are waiting for you. Now, today we're covering stop losses. All right. Risk management. Stop loss is pretty much where you place your risks. That way, when and if the market were to go against you, you won't blow out your account. Not only just that, this is what you tell yourself, hey, I am willing to lose 10, 20, 30, $50. It could be 100 to two, three, four, $500. That's how much you're willing to risk. That way, if it hit that and that's it, you're good to go. All right. Now, first thing first, we have rules. All right. We always have rules. These are the 4 rules, and that goes hand in hand with your trading log. Right. So, first thing first, when it comes to back testing or trading, forward testing, demo trading, paper trading, rule number 1, all setup has to be based off higher time frame. Okay. So, we got month, week, and day. Always higher time frame. Rule number 2, time frame we use to enter or execute the trade. The lowest time frame we do use or always going to use is going to be the H4. All right. So that is the 4-hour. Okay. That is the 4-hour time frame. Okay. 4-hour time frame. And with rule number 3, or PA. All right. PA is pretty much all price action. Okay. Price action, where price is at a specific level and it is telling you, hey, it is now time to take action. 2 and 3 goes hand to hand. All right. A price action, of course, is going to be the engulfing bar. All right. Either the bullish engulfing for a buy or a bearish engulfing for a sell. Remember, engulfing, it pretty much tell you, hey, buyers have now engulfed sellers or sellers have engulfed buyers, right? So it's telling you buyers are now in control or sellers are now in control. So that's it. All you got to do is just simply wait for the market to tell you of who's in control at that specific zone and just join them, right? And rule number 4, which is what we're going to go over today, that is your SL, all right? Stop loss. If you really think about it, it just means stop losing, okay? Stop losses, all right? Stop loss, all right? So pretty much stop losing, right? Meaning when the market's going against you, yeah, you're going to draw down, but you could cut that short if you already have a premeditated X amount that you was willing to risk, that 1% or that 2 to 3%, right? So once they hit that, it closes you out. You be good to go. All right. So now, when it comes to stop losses, right? Okay. When it comes to stop losses, we always want to understand exactly where we need to place a stop loss. So here's a little lesson behind that. Okay. SL, like why? Let's put that why, right? So when it comes to stop losses, especially we're going over buy markets, all right, you always want to place it at the last low, right? At the last low, all right? SL, your stop loss should always be placed at the last low. Now, it's not random. It's for a specific reason, right? When the market gives you a setup on the higher time frame, let's just go with the typical setup that we all used to. Let's do a double bottom after an uptrend, right? So we got an uptrend, a bullish market, right? And market comes back down, right? We have market come back down, when they give us that retest that we look for. It comes down like so. Now here we have a double bottom, right? So with this uptrend, we know we have high low, right? Where each low is higher than the previous one, and then we have higher high. Okay, so an uptrend or a bullish market gives you higher highs and higher lows. So typically, we wait for a retest of a previous high and a price action accordingly anywhere, either at the structure zone that was broken or the high that was broken, or somewhere in the middle, right? When it comes to the retest aspect of it. Now, in the case of this, right, market did retest and it came to this zones, right? This previous high low is a structure point. It's a bottom point, right? So we place our zone. Again, we place our zone starting from here, going straight across. We know it matched the previous one, but we're not worrying about that. And also, I want to make sure that we understand these setups are based off the higher time frame, monthly, weekly, and daily. All right. So this is pretty much going to be the 4-hour, how it's going to look like. So we have this double bottom like so. So this is the first bottom right here. is the first bottom. We place the zone for when and if market come back to it, right? So here is the second bottom. Now we have a double bottom setup. Now it's not a valid setup simply because we don't have a price action that is telling us, hey, market now is in a bullish reversal trend, or buyers have engulfed sellers to go up, right? So for us to take the buy to go up. Now, when market come to this structure point here, we wait for a PA, right, which is going to be the engulfing bar, to be more specific, the bullish engulfing, because we're looking for the buy. So let's just say this right here was the last selling candle. So we look for a bullish engulfing, right? A bullish engulfing is when the bull candle closed above the last, okay, the last selling candle, that indicate buyers have now taken control. Now, we do have different variations of that. That's why we have the ultimate price action, again, available to you at Amazon, right? All 7 different variations of bullish engulfing. Now, when we get this set up right here, we pull our trigger, meaning we click buy at the close of that. Now, again, these price action will always, okay, will always be available to you at that 1, 5, or 9, either AM or PM, all right, Eastern time. Now, it depends on where you're at, of course, it may vary, but it will always be at a 4-hour increment, right? So we have this bullish engulfing here. We enter here for a buy, right? Now, I'm sure you was taught that, from depending on who you learn from, right? So that's one thing I want to throw out there, all right? I'm not throwing no shot at anybody. A lot of guys or girls out there that have videos either on YouTube or they have courses for sale. It's not that they are not successful at trading, okay? It's not that they're not successful. But what they did was they recorded their process, what they did to be successful, and they put it online as a course. Okay. Their psychology is not yours. Their method is not yours. Right. So they put that out there and then you pay X amount of money for it. And you're not succeeding simply because you just going over what they did to be successful. They're not exactly teaching you to understand what the market is doing and why it's doing that. Right. And how to anticipate what's about to happen next. And when the market does give you that, why you should join it accordingly. Okay. That's one of the main reason why a lot of traders are not successful, right? On my psychology book, I do put that in there. They say that what is it, 95% or 87% are of traders are unsuccessful. Okay, cool, right? But think about it, right? If 87% of traders are not successful, who are they learning from? At what point do you start blaming the teachers? All right. If the teachers are not teaching understanding, how can you blame the students? All right. So, like, but yeah, let's continue with this. So, here is where we would take our buy. Okay. We will take our buy right here and then we'll target the previous low. Now, remember, this is a bullish trend where the market is giving us higher highs and higher lows, right? So, here is the previous low right here, right? This is the previous low before market had give us this low. Now we have a double bottom at this 2 low point. When we take our buy, we want to look at this low for a stop loss, right? Remember the why, right? Why are we targeting this low? It's very simple, okay? Like think of it like this. If, well, let's place our stop loss first, right? We're going to place our stop loss at the last low, like so. Now, please understand, when you are trading, trading is money management. That's one of the lessons that I had to learn the hard way. Okay. It's not so much about making money. It's you managing your account as it grows, meaning losing as little as possible as it grows. And one of the best ways to do that is to treat it like a job. You clock in and clock out. So let's just use this price action plus the stop loss, right? So you wake up at 9 a.m. So between 5 and 9, that's the last 4-hour candle. Let's just say this is all bullish engulfing. If you trade the New York session, here we go. It's just a one click of a button, right? So you click here for a buy, right? So you clock in at your job, right? And then you place your stop loss at the last low, right? And then you just leave it alone. Now, the why we place our stop loss at this low is simply because of this.